Today we had yet another of what the media had been billing as the most important Fed press conference ever, because this was the conference where Chair Powell, the magician that he is, was going to magically transform himself from a dove into a hawk. And the reason for this miraculous transformation is that the inflation numbers were getting hotter and hotter and hotter. And in fact, Powell himself had already retired a term he never should have used in the first place, and that's transitory, from his vocabulary. So he's no longer referring to inflation as transitory. Therefore, it's not transitory, it's permanent. And now the Fed can't hope that inflation goes away on its own. The Fed actually has to do something to put out the fire. And that's what people were expecting. That's what they were bracing themselves for. In fact, the stage for today's magic act was actually set yesterday when we got the release of the much hotter than expected producer price numbers for November. In fact, this is the worst, meaning the biggest increase in producer prices in the history of the survey. Now, they weren't keeping track of this back in the 1970s, so there probably was a bigger increase. We just weren't charting it. I'm not really sure when they started with the PPI, but this is the worst one they've ever tracked. And if you look at where the expectations were, the consensus was for a 0.5% increase on the month and a year-over-year increase of 9.2, which is pretty big. But the actual numbers came out even bigger. The monthly increase was 0.8, and that was substantially above the high end of the range of consensus, which went from a low of 0.3 to a high of 0.6. Now, there were some people whispering about that we may get as high as 1%, so I guess we didn't beat the whisper number, but 0.8 is still a pretty big number, and it was higher than people expected. Year over year, another beat. In fact, the prior month year-over-year PPI increase was initially reported as up 8.6. That was revised to up 8.8. The expectation was for November to clock in at up 9.2. Instead, we came out at up 9.6, again above the upper end of estimate. The high was 9.2, so we're above that. The low was 8.4. These are big numbers. Again, the worst number ever, but also if you compare producer prices to consumer prices, the year-over-year increase in consumer prices is 6.8%. There's a big difference between 9.6 and 6.8. Yes, and the producers are eating that difference. They are taking a hit to their margins to spare their customers the full impact of inflation, which again shows the lunacy of what some of the Democrats are saying. Elizabeth Warren has specifically blamed greedy business owners for gouging their customers. That's why we have inflation, because these greedy business owners are taking advantage of their customers as we're coming out of a pandemic, and they're just gouging them with high prices. Well, if that were true, then consumer prices would be rising more than producer prices. The fact that it's the other way around shows that it's the producer who's actually getting gouged. The customers are the ones doing the gouging, or the producer is allowing the customer to gouge him because he's afraid of losing a customer. That's what's been going on. And as I've said, a lot of these businesses are kind of reluctant to push through price increases because they believed the Fed, they believed Wall Street or other economists that it's just temporary, it's just transitory. So don't bother raising your prices when you're just going to have to roll them back in a few months. Just live through it for a few months and everything will be fine. Well, it's now getting more and more obvious that it's not fine. I think producers are going to look to make up for lost ground in 2022. So not only will consumers get hit with the full wrath of inflation in 2022, but they're going to get hit with the inflation that they were shielded from in 2021, because I think the producers will not only raise prices enough to compensate for the 2022 inflation, but they're going to raise them by enough to compensate for the portion of the 2021 inflation that they lost out to because they weren't aggressive enough in raising prices. In other words, Elizabeth Warren, businesses should have raised prices even more as a result of the inflation that the government caused, but because they were nice people, because they were concerned about not hurting the customers, they absorbed that inflation. They basically took the bullet on behalf of the customer. They couldn't take all the bullets, but they took some. But I think next year, the consumer is going to have to get hit with the full wrath of the inflation that is being caused not by the business owners. The business owners are suffering from inflation just like the consumer. You know, businesses want to sell as much stuff as possible, and they know that they can sell more stuff at lower prices. So all businessmen want to try to figure out how to lower their prices. Now, they don't want to lower their profits, so they want their costs to go down and prices go down so they can maintain their margins but sell more stuff. They hate to have to raise prices, but they have no choice because the government is destroying the value of the money, and so the cost of business is going up, and so they are reluctantly passing on these higher prices that they're experiencing to the customer, because ultimately the customer is on the hook for all of the costs associated with producing the products or providing the services that they're buying. Now, getting back to these PPI numbers and looking at how bad they are, even the core number, right, stripping out food and energy, which the Fed likes to do, that was up 0.7, almost twice the 0.4% gain that had been expected, above the upper end of the range, which was 0.5. Year over year core, up 7.7%. Even if you strip out food and energy, you're talking almost 8%. That's 4 times the so-called 2% target that the Fed has. Again, that exceeded the 7.2% forecast. And even if you strip out trade services as well as food and energy, you're still up 6.9%. So this was a horrible report card on inflation, an even bigger fail than the markets had expected. And of course, as soon as this number came out, the dollar rallied, gold sold off. Again, why? Why is this happening? Why is high inflation good for the dollar? After all, high inflation basically means the dollar is losing value. So why is a dollar losing value more attractive to investors? Why would you want to buy dollars more when you're told that they're losing value even faster than you thought? Again, it's because everybody believes that the Fed is now going to finally have to fight inflation. After all, it's this bad, they can't keep ignoring it. That's the same reason gold keeps going down on higher than expected inflation, because everybody believes, okay, this is it. They can't ignore it anymore. Now they're really going to have to get serious. They're really going to have to fight inflation. And so they're going to have to raise rates, and that's going to be bearish for gold. At some point, the markets need to figure out that high inflation isn't good for the dollar and it isn't bad for gold. And it doesn't mean the Fed is going to fight it. The fact that the Fed let inflation get this bad and it hasn't fought it yet is proof that it's never going to fight it. I mean, you can't keep looking at ever increasing inflation numbers and say, aha, now the Fed's finally going to do something. I mean, are the markets really going to sit back for another year and maybe inflation gets to 15%? Aha, okay, now they're really going to do something now. This is it. They got to move rates off of zero. They got to hike rates. So we really got to sell gold, because 15% inflation means the Fed is going to get serious about fighting it. If the Fed was ever going to get serious, they would have already done so. The evidence was overwhelming that we had an inflation problem a year or two ago, and the Fed did nothing.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70. In the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.